You own stock, maybe in a 401k, maybe an app on your phone, and you've been told that makes you an owner of corporate America. It doesn't, because here's a number nobody puts on the news. The richest 10% of Americans own about 90% of the entire stock market. The bottom half of the country, they own 1%. One. So when CNBC tells you the market hit a record high, the obvious question is, a record high for who? Stick around, because by the end of this, you'll know exactly who owns the stock market, why almost none of it is you, and the part nobody mentions. There are basically 3 companies sitting on top of all of it. Let's get into it. First, let's rewind, because the story we all got taught is a nice one. The story goes, the stock market is democratic. Anybody can buy a share. Your barber owns Apple, your dentist owns Nvidia, grandma's got a little Coca-Cola, we're all capitalists now, one big happy ownership society, and technically more than half of American adults do own some stock, but more than half of people own some stock, and the stock market is widely owned are 2 completely different sentences, and the gap between them is where all the money hides. Because owning some stock and owning stock that matters, those aren't the same thing. Not even close. Let me show you the difference with one guy. Meet Kevin. Kevin's doing everything right. He's got a 401k. He throws in a few $100 a month. He's got a Robinhood account with, let's say $800 in it, mostly one share of something he heard about on TikTok. Kevin is on paper a stockholder. He is part of the 58% of Americans who own stock. He's in the statistic that politicians love to quote. Now, meet the other side of that statistic. The top 1% of US households own roughly half of all the stock in the country. Half. That's around $27 trillion. And hear this twice, that top 1% owns more stock than the entire bottom 90% of the country combined. So Kevin and his $800 are technically in the same investor class as a billionaire with a 12-figure portfolio. Same club, wildly different membership. Here's the uncomfortable truth. The stock market isn't a pie everyone gets a slice of. It's a pie where 10% of the table takes 90% of the pie and then tells the rest of the table to be grateful they got a fork. So why is it this concentrated? 3 reasons, and none of them are a conspiracy. They're just math. 1, you can't invest money you don't have. When you're living paycheck to paycheck, just buy index funds is a sentence written by someone who's never been broke. The bottom half of the country isn't out of the market because they're dumb. They're out because there's nothing left at the end of the month to put in. 2, the rich don't just own more, they own differently. Your money's in a 401k you can't touch till you're 65. Their money's in stock that pays dividends, gets borrowed against, and compounds for decades, untouched and barely taxed. And 3, this is the big one, and it connects straight back to our last 2 videos. Remember how money gets created and pushed into the economy? Whoever's closest to the new money gets it first, while prices are still low. That's the Cantillon effect. And the people closest to the money, they don't spend it on rent. They buy assets, they buy stock. So every time the system creates more money, it doesn't get shared evenly. It flows up into the hands of the people who already own the market. The market going up isn't lifting everyone. It's mostly making the people who already owned it richer, which brings us to the part that should actually bother you. But wait, if the rich own the shares, there's still a weirder question hiding underneath. Who actually votes those shares? Who shows up to the meeting? Who tells Apple and Exxon and your bank what to do? Because it turns out it's not millions of investors. It's almost nobody. It's a tiny handful of firms you've probably never bought a single product from. If a channel explaining the stuff the financial news quietly skips is your kind of thing, hit subscribe. It's free, it annoys exactly the right people, and it's the only way these videos find anyone. Okay. Back to the 3 companies that quietly run the market. When you buy an index fund, an S&P 500 ETF, the thing every finance guy on earth tells you to buy, you're not really buying the companies. You know, you're handing your money to the fund company and they hold the shares. And 3 fund companies have swallowed almost the entire game. BlackRock, Vanguard, State Street, the big 3. How big is big? Together, those 3 are the single largest shareholder in about 90% of the companies in the S&P 500. Apple, Microsoft, ExxonMobil, your bank. the airline that lost your bag. Same 3 names sitting at the top of nearly all of it. 10 years ago, passive funds owned about 7% of the S&P 500. Today, it's around 24% and climbing. A quarter of America's biggest companies owned through funds voted by a tiny cluster of firms. Now, to be fair, and this channel does fair, BlackRock will tell you they don't own that stock. They just hold it for people like Kevin. Technically true. But they cast the votes attached to those shares. So when there's a vote on who runs Apple or what a company does with its billions, it's not Kevin's voice in the room. It's theirs. So we went from everyone owns the market to 10% own 90% of it to 3 firms vote most of the shares. That's the real ownership map. And it looks nothing like the brochure. Okay, why should you care? You're not a billionaire. You're not BlackRock. Here's why it matters. 1, when politicians point at a green stock market and say, look how well the economy's doing, remember who actually holds that market. A record high is a record day for the top 10%. For the bottom half, the people who own 1% of it, a booming market does almost nothing. The stock market is not the economy. It never was. 2, because the same small group owns the assets and gets the new money first, every boom quietly widens the gap. You're not imagining it. The system isn't broken. For them, it's working exactly as designed. And 3, this is why just buy index funds and you'll be fine is true, but incomplete. Yes, owning some of the market beats, owning none. You should probably be in it. But don't confuse renting a window seat with owning the building. You're putting your money into a system whose top floors were bought out long before you showed up. That's not a reason to quit. It's a reason to stop believing the brochure. So here's the real picture. You were told the stock market is owned by everyone. The truth, 10% own 90% of it, 1% own half, and a tiny cluster of fund giants vote most of the shares in nearly every company you can name. It's not a conspiracy. Nobody's hiding it. The Federal Reserve literally publishes the numbers. It's just boring enough and inconvenient enough that nobody bothers to say it out loud. And that's exactly what this channel is for. The ownership map nobody draws for you. So next time someone tells you we're all shareholders now, you'll know the real question. Not do you own stock, but who actually owns the stock market? And now you know it isn't you. Subscribe. Video 4 is already loading. See you in the next one.
Once in a while I dream. Once in a while